Our headline story: Zimbabwe tackles inflation. Inflation has wreaked havoc on Zimbabwe's struggling economy, but it seems some decisions are starting to bear fruit. Inflation figures are dropping, but is this only on paper, or is the economy truly improving? I'm Tolulope Adeleru-Balogun. Welcome. This is Business Edge. Zimbabwe's central bank reported this week that it expects annual inflation to decline and reach a low of 55% by July 2021. In a statement, the bank said it is satisfied with the disinflationary trend, as inflation had fallen from a peak of 837.53% in July last year to 194% last month. Zimbabwe's annual inflation has been on a downward trend since August 2020, following the introduction of a foreign exchange auction trading system in June of that year. The system has helped bring some sanity to the foreign exchange market. To support economic activity and the current stability in the economy, the central bank said it would maintain its main lending rate at 40% and the interest rate on the medium-term accommodation facility at 30%. The bank also approved a financing facility for small and medium enterprises to boost productivity. The MPC reaffirmed its strong commitment to continue with a conservative monetary policy stance to ensure that the current price stability is maintained, the bank said. By July this year, all the 12th monthly jumps in the annual inflation calculation will be from the low months, hence the prediction of 55%. Now joining me from Lilongwe, Malawi is Hubert Nanthambwe, a developmental economist. Hubert, thank you so much for joining us on Business Edge. Welcome.
Thank you. It's my pleasure.
So let's start looking at the inflation numbers. So inflation in July of last year was 837.53%. And now of March this year, we're seeing that inflation is standing around 194%, according to the MPC. That is a really sharp decline, especially given the fact that Zimbabwe, like many other countries, is coming out of the pandemic and the economic effects of that. What can you tell us is responsible first for the high inflation figures that the country has experienced over the time?
Thank you for that question. Firstly, to begin with, I think we indeed have to agree that Zimbabwe is not the only country which has been affected by the pandemic. Not only was it affected by the pandemic, Zimbabwe has, over the past years, experienced hyperinflation. That was specifically the unusual increase, in the prices of goods and services, uncontrollably over the time. So generally, coming to 2020, when we were entering 2020, I think the Monetary Policy Committee came up with a strategic policy framework that was aimed especially on tackling three issues. The first issue was on fostering exchange rate, the exchange rate stability. That was through the market exchange rate, that was through the auction system. The second one also looked at the management of monetary policy supply. And the third one, which was also, very important, it was the financial sector stability. But then looking at the decrease in the, the sharp decline in the inflation rate from, that was in July last year to the month of April this year, we can largely attribute it to the main prongs that was to do with the exchange rate stability and also the management of monetary supply.
Okay.
This is because most of the times when we are experiencing hyperinflation, it normally arises because we are having, a lot of printing of monies and supply of monies that is not supported with economic growth. But then, looking at these measures, the framework that was initiated in August last year, after that July inflation, we can see that it aimed at contraction monetary policies, that aimed at minimizing the circulation of currency in the economy, and it also focused on stabilizing the exchange rate through the market exchange auction system. So these two might have contributed greatly to the reduction of the inflation.
Okay.
That is from 837 to about 194, especially recorded in the month of April.
Yes. So you've mentioned two things that you think may have contributed to a reduction in the inflation numbers. So let's just take a quick trip back to 2020. So in 2020, we saw Zimbabwe's GDP was estimated to have contracted by 8% for a second year in a row as COVID halted economic recovery. Operating restrictions led to a depressed manufacturing, non-mineral exports, and hospitality, trade, and transport sectors. Sales of manufacturing and services firms in July 2020 were about half of the sales they made in 2019. But as you said, we've seen this trend from almost 800 and something percent to about 194. So aside from those two things you mentioned, the stability with the foreign exchange auction system and the other part of it, what else do you think is responsible? Because it has to be a combination of things that have really assisted Zimbabwe in being able to turn around these inflation figures.
All right, thank you for that question. Usually, if we have to look at the history of Zimbabwe, especially moving from the 2009, when we recorded billions, if not trillions of inflation, and when we gave up on the Zimbabwean dollar to adopt the US dollar. After adopting the US dollar, I think it was in 2019 when the Zimbabwean government said, we are no longer using the US dollar. Now we are no longer using any foreign exchange currency. We are just using the Zimbabwean dollar. That was in 2019. So after such an incident, I think there were a lot of issues like fears from the people, especially on how they can trust, the Zimbabwean dollar after it had failed them before. So such fears limited the usage of the local currency, and I think we saw a huge number of increase in the cryptocurrency, especially to do with Bitcoin and the others. So I think such small circulation of the local currency attributed to the lower circulation, of the monies in the economy. And I think that might have helped to the sharp decline in the inflation rate coming the year 2021 April.
Okay.
Thank you.
All right. So we've seen the decline now to 194, but it looks like we're going to 55. So the Zimbabwe National Statistics Agency data is showing that the continuing downward trend in the inflationary figures, with the rate falling to 194% in April, could land at about 55% by July. And this prediction is also coming from the central bank, or rather the Reserve Bank of Zimbabwe, which is predicting inflation of 55% in July. We're looking at just a few months from now, Hubert. Do you think this is possible?
I really think that is attainable, especially if we look at how the inflation has been moving since last year. If we saw on the figures from last year, after the Monetary Policy Committee met and had such framework on monetary control, we can see that there has been experienced sharp decline in the inflation rates, only until maybe reaching December, when we saw a bit of an increase in January. But usually the increase in January was affected by the effective increase in many other aspects of the economy, like the increase in rents, increase in salaries, increase in prices of goods that were not controlled by the government. But then looking from January, just starting from January and going downwards to February, we can see that in January, the inflation, year-on-year inflation was somewhere about 363%. In February, it dropped with 41 points to 322%. In March, it dropped again with 81 points to 241%. And in April, we are on 194% with the 47 points drop. So I'm thinking that this decline, if it continues at this pace, it is very much possible and attainable for us to achieve the 55%. And also, if we look at the report that was produced by the newly elected Monetary Policy Committee, I think it was a report in January, we can see that they have also tried to maintain the same measures that have helped them to achieve the decline from from August to April. So I believe these issues combined together, maybe also with the good harvest that is being expected this year due to the good rains and the likes, we believe that inflation will be cut down. At least we can attain the 55% increase.
All right, so expectations are aligning with what the Reserve Bank of Zimbabwe is expecting for inflationary trends in the country. But it's more than just inflation, it's also the economy. Hubert, we're going to take a break. But when we come back, let's get into the facility that's being provided for some of the businesses and productivity in the country. We'll also touch base with what the World Bank is expecting for Zimbabwe this year and some moves. There's the Zimbabwe Finance Conference as well as now a global investment roadshow. Are they going to yield the fruit that Zimbabwe is looking for? This is Business Edge. I'll be back. Still with me is developmental economist Hubert Nanthambwe, who's joining us from Lilongwe, Malawi. Now, Hubert, beyond the conversation on inflation, there are some other things happening in Zimbabwe we should also look at. So the same MPC that's saying they're going to remain conservative when it comes to movement of interest rates and other things, they've also approved a facility of $500 million to enhance production and productivity across all the sectors of the economy. What are your thoughts on this? Do you think this is enough to aid the economy in recovery? Do you think it's also going to go far enough to do what needs to be done?
Okay, thank you for that question. Firstly, to begin with, I think money being a scarce resource is usually cannot be enough, especially to economic units or economic beings whose needs are insatiable. But maybe we can look at it in this way to say, since the annual inflation fell, for the third straight month to at least 194% in the month of April, we can see that the bank also reaffirmed its commitment to especially controlling the conservative monetary policy by also approving this $500 million to help the microeconomic, small and medium enterprises, especially to thrive in the production and productivity across the sectors of the economy. So looking at this, especially since we are talking about the MSMEs, we have to firstly understand how can we define them. Usually they are defined by the number of employees that are available or that are working in those SMEs. So taking a look at this, we can see that from the FinScope survey that was conducted in Zimbabwe, I refer to the one that was conducted in 2012 at the baseline for, I think the other one it's not yet out. It demonstrated that there were about 2.9 million employees in the micro, small and medium enterprises. So dividing this amount of population by the $500 million, at least we can have an average of $172 per every employee in this type of economy. So looking at $172, since this is just an average, but it goes with the relativity depending on the size of the enterprise, we can still hope that it can trigger something beneficial, especially to the productivity of the economy. So we cannot comment that it's enough, but we still believe that depending on the activity of the enterprise, we can still hope for something better by the end of the day.
So what then do we now do with this 30%? So the bank also said that they would be keeping the 30% midterm accommodation facility, which means that that's the interest on it. So this is the same facility that we're looking for Zimbabwe to give to small and medium scale enterprises, MSMEs. But at 30%, how do you think that's going to work out? Would that not chase away the very people that we're hoping will take advantage of this credit facility?
Thank you for that question. Looking at the 30% interest rate, I think maybe we should take it back to the year 2019 when the interest rate was somewhere around, I think it was around 70%. Then they had to reduce it to somewhere around 30%. 25%, I should say so. So since this type of, interest rate usually depends on the liquidity of the money in the economy. So we have to understand that the committee is trying to control the supply of money so that it can still deal with inflation. So maybe they have realized that maybe from the 70% that was prior to, I think, 2019 to the 25% that was now being experienced in the year 2020. Maybe they experienced that there was an increased flow of money in the economy. So maybe they have decided to increase it to 30% just to make sure that they control for the inflation. But on the other hand, we are looking at now the growth and the future of these enterprises, the small, medium, and micro enterprises. We can still see that it is a challenge, but since mostly, as we can see now, I think they are just trying to use the concept of control the inflation, and then maybe everything to do with employment and production will go back to its levels normally in the near long term. So I think maybe they are basing on such an argument.
So Zimbabwe, more than most countries, has had its fair share of currency issues. And now in recent times, we know that the government has accused domestic banks, telecommunication operators, and other businesses of making excessive profits off the hard currency that it makes available at auctions. The Zimbabwe dollar now trades at 84 to the US dollar after being pegged at parity just 2 years ago. Many goods and services, including fuel, are priced in US dollars or the greenback equivalent, and they place them out of reach of many Zimbabweans who earn local currency. For example, teachers who were paid a minimum of about $500 3 years ago now earn the equivalent of $213. The incomes of most workers have also shrunk. So while we've seen this foreign exchange auction system that Zimbabwe has brought about stability, do you think this is the final solution to Zimbabwe's currency issues?
Okay, thank you for that question. The foreign exchange auction system, on its own, it has some of the advantages and some of the disadvantages. Maybe if we try to look and understand at what happens, especially, because it's like we are trying to determine the exchange rate based on the, as I understand, it's been conducted each and every week, so it's based on the weekly demand of the foreign currency. So normally, these guys are not trying to keep the inflation. They're not trying to keep the exchange rate fixed. They are trying maybe to float it a bit so that maybe it corresponds to the demand that is there. With this in mind, because it uses the average values of the bidders, their larger entities and their small entities that are bidding for the foreign currency. So somehow it can be unfair to the poor man, especially if the average is being affected by maybe some of the the outlier values. For example, if I come to bid for US dollar at maybe for $1 US at maybe 100 Zimbabwean dollars, and then somebody come and bid for it at $1 US, then we can see that the inflation can be distorted or can be, can be biased towards one side. So with such incidences, most of the times it is those who are at the below side that are mostly affected than those that are at the higher side. So usually I wouldn't say this is the final solution. There can still be better solutions to it. And maybe as time is going by, as we're trying to control for the inflation and the likes, maybe in the near future we can resolve to other better means. Sure.
All right. Okay, so finally, Hubert, my last question, because I have to let you go. This week, the Zimbabwe Finance Conference urged those in the diaspora to channel remittances for the country's economic growth. In April, we had the Ministry of Finance and Economic Development start a global business roadshow in order to attract increased investments into the country and also show what the comprehensive economic policy reforms have been doing. But according to the World Bank, we've seen what the pandemic and its impact has been in Zimbabwe. So according to the bank, it has disrupted livelihoods, especially in urban areas, and added 1.3 million to the extreme poor in Zimbabwe. Estimates suggest that the number of extreme poor has reached 7.9 million in 2020, which is almost 49% of the country's population. Now, some surveys indicate that nearly 500,000 households have at least one member who lost their job in 2020. So people are happy with the positive trend for Zimbabwe's inflationary trend or inflationary rate. We're happy about that. We're happy to see that there is some kind of facility going into MSMEs as well. But we also have to take cognizance of the fact that the pandemic did actually stall economic recovery. But we also know that moves are being made to bring more money into Zimbabwe. What do you think are the next critical and crucial steps that need to be taken in the next few months to cement some of the positive things that we've seen lately?
Okay, thank you very much for that question. Indeed, we have observed good progress on many of the macroeconomic indicators. On that, maybe we have had challenges in the past year in 2019 and 2020, when we observed maybe a contraction in the maybe GDP for the country. So basing those such things maybe due to COVID and the likes, and now that the situation is getting better, and at least we are having some good harvests and everything is going on okay, I would rather maybe suggest that the Reserve Bank should also consider now maybe trying to balance up the issues to do with inflation and unemployment, because recently unemployment rates are still not reasonable. They are still high, and we all know the trade-off between unemployment and inflation. As we are trying to put much effort in curbing for inflation, we should also be trying to balance up on the thing that has to do with unemployment.
Okay.
So the next thing important thing is about to do with what I can say, maybe the exchange rate, or maybe I should say the trust of the individuals in Zimbabwe, especially on the Zimbabwean dollars. We have seen that people are no longer trusting the Zimbabwean dollars. Mostly they are preferring other currencies, cryptocurrencies and the likes. We have also observed from an economic point of view, especially according to literature, that mostly, inflation is based on expectations. Sometimes the way people are expecting what will happen next also affects the way the inflation goes. So I would say the Reserve Bank should try to reinstore trust in the people, especially on how it will be managing the Zimbabwean dollar, so that people can start trusting the dollar again, and maybe we can observe something better.
All right, fantastic. And I think that's a good note to end on. Hubert Nanthambwe, developmental economist, joining me from Lilongwe, Malawi. Thank you so much for being our guest on Business Edge.
Thank you once again.
All right. We'll be wrapping things up with a quick look at a few stories we're keeping our eyes on. Now we start with this. The price of crude oil is surging to almost $70 a barrel for only the second time in over a year as hopes grow of a resurgence global economy. Brent crude, the global benchmark, traded within a few decimal points of $70 on Wednesday on a raft of positive economic news, including the IMF's forecast that growth next year would hit 6%, the highest in 4 decades. Tunisia's finance minister Ali Kouli has announced that the country expects to agree on a new program with the International Monetary Fund within 3 months as talks continue on reforms for the country's troubled economy. According to him, discussions are ongoing on the size of any loan the Washington-based lender may provide. At number 3 on our list, the level of non-performing loans in the banking industry is expected to rise in the second quarter of 2021. This alert was issued in the latest Credit Officer Survey report by the CBK for the Q1 ending March 31st, 2021. And finally, on NC4 to watch, new research from MasterCard shows that the adoption of new payment technologies in Kenya, such as cryptocurrency, is rising, and consumer appetite for new, fast, and flexible digital experiences continues to grow. The MasterCard New Payment Index shows 99% of Kenyan consumers will consider using at least one emerging payment method, such as cryptocurrency, biometrics, contactless, or QR code in the next year. And that's it on this edition of Business Edge. I'll see you again sometime soon. I'm Tolulope Adeleru-Balogun. Do have a good one.